Yeah, so when making this podcast, I thought people who've listened to the show for a long time or new people, what can I give them that they can try and hang on to or use as they go into 2025 that can make a difference? And what I've come up with is something that was inspired by an episode we did about 4 or 5 years ago about steps towards financial freedom. But before I get onto that, there's one task I would love everybody to do who listens to the show this year, and it's to build that black book, or you can call it a black box. Now, the idea was originally inspired by when you unfortunately see planes crash, the first thing they do is go and try and find the black box, which has all the important information about what happened ahead of that disaster. Now, a number of years ago, I came up with the idea of a black box for people's personal finances. And so the original concept would be that if the unfortunate were to happen and maybe you passed away, then people who have to untangle your finances, or the people in your family who have to actually execute your will, it's very hard to find all the various different policies or accounts that you have because they're not pulled together and noted anywhere in particular. So one of the things I suggested people do is pull all that information into one place. But the other benefit is if you have a shared finances, so maybe you are part of a couple, you're married, for example, in a civil partnership, then you might share your finances, but one person usually tends to run the household finances. And so what you want to do is try and empower people to know what's going on with their money, because not only is that a positive for them, but also if something were to happen to you, then they know what's going on. So in the show notes, I'll put a link to a PDF if people want to use a hard physical copy to produce their own black book or black box. Now, obviously, you could use something like a password protected spreadsheet because there is obviously a slight security or safety issue when it comes to writing things down on a physical piece of paper. But if you're going to put it somewhere safe in your house, then it should be okay. But the idea is that you go down and you write all the accounts that you have out there. We're talking about account numbers, sort codes. We're talking about the names of the bank. We also want to put down information like the various insurances you have, whether it's home insurance, car insurance, who's it with, how much does it cost a month, what are the policy numbers, who do they contact if they want to cancel the policy or actually inform people about your death, who are your savings with, who are the investments you have with, what are the policy numbers. So all of the information and contact details so people could take charge straight away of what's going on with your own personal finances. Now, I do this at home, and one of the reasons is because obviously I am the person who tends to run our household finances, but it's something that I wanted my wife to have. So if the worst were to happen, or even that, just so she understands and can see what's going on with our money and where things are, and so she can control it as well. So if you do nothing else this year, do a black book, because there'll be a lot of things that you will suddenly work out that, oh yeah, I've got premium bonds somewhere. How much have I got? What are the policy numbers? Things like that. And for yourself, what it forces you to do is look critically at what you have. So it could be things like the interest rate that you've got on your savings. You have to note all of those things down. So the template you can download via the show notes, but you can do it in a spreadsheet if you so wish by using the template, just to give you the idea of the information that you should be putting in there. Once you have all that information, it will enable you then to be able to sort your finances, because if you own it, so you know what you've got and the problems you might have, then you can start to fix it. So the black box was part of the Own It, Fix It, Grow It campaign that we did a few years ago. Now, if you've done that, then you should pat yourself on the back. It's something we should all make a resolution to do. But leading on from there, if you're listening to this podcast and you've got a lot going on with your finances, I want to give you some simple steps that you should aim to complete in order to try and improve your finances. And it's actually the basis of something called financial independence. And financial independence is where you have the choice whether to work or not. So you've got to the stage where you have enough money to not have to go to work if you don't want to. It doesn't mean you're a millionaire. It just means that you have enough to cover your bills maybe. And it's part of that whole financial independence, retire early movement. So the first step is to build a spending plan. And if you go back to the early part of the podcast, I talked about that budget planner that we give away for free. Make sure you download that so you know what you're spending your money on. Don't think of it as a budget, but a spending plan. That changes the narrative and the way you think about it. It's more positive. You're not restricting yourself. You've got a set amount of money. You're going to choose what you want to spend the money on and how it's going to be divided. It'll also encourage you to do a direct debit review. So look at all the direct debits you have in accounts and make sure that you aren't paying for things you no longer need. And also download one of the budgeting apps. We'll put a link in the notes of the show to the best budgeting apps out there. I'm a fan of Money Hub in particular. It's a little bit more hands-on than other apps like Emma, but it's one that I can tweak and tailor to my own personal finances, and it's relatively cost-effective. So you make sure you build a spending plan. Once you do that, that means you can quantify your money and you can therefore control it. The next step is you need to remove your reliance on credit. So you can only do that once you've built a spending plan. So if you're reliant on credit, so that means you're always going in to credit to survive each month, then you need to either seek help from somebody like Step Change. So they're a charity to help people who are struggling with debt, and they can help you with your debt. If you think you can manage on your own, then you need to be able to pay at least the minimum monthly amounts that you have to repay each month. You have to be able to do that, because that means that you are servicing your debt, because eventually you want to start paying more than that if you are ever going to repay your debt. So the spending plan will help you to be able to remove your reliance on credit, because once you're paying more than the minimum, you will start to eat away at that. So where are you on this list so far? Step 3, you then need to start to build a small emergency fund. So this emergency fund might be equivalent to only 1 to 3 months worth of outgoings. Now, we've covered this before on the podcast. If you go back to episode 270, I talked about emergency funds and ways you could build them easily. If you heard earlier, I was talking about things like money box and roundups. They're very good ways of building emergency funds. Now, once you have a small emergency fund, what that does is give you a buffer from those expenses in life. So your tire blows up and you need to replace it. You won't have to rely on credit if you have a small buffer to be able to pay for that expense. Life always throws curveballs at you. But then once you've paid for that unexpected expense, you then need to fill your emergency buffer back up again. Step 4, I would say go and auto-enroll in your workplace pension scheme if you haven't already. I mean, it's free money on the table from your employer and from the government in terms of tax relief. Then once you've done that, you can start looking at step 5 potentially, which is starting to clear high interest debt that you have. So these are things that are over 5% typically, so unsecured debts. We're not talking about your mortgage here. You want to start to clear your debt pile. So you might start using things like the snowball method if you're looking at credit card debt. So that's whereby if you've completed your black book, for example, you'll know all of the credit cards you have, how much outstanding debt you have, and how much interest you are being charged on that debt. And what you will do is pay the minimum amount off of all of the credit cards, but the highest interest charging credit card, you will pay more than the minimum, as much as you've got spare to try and get rid of that very expensive debt. And then once you've done that, all of the money you were paying a month towards that debt goes on to the next debt with the highest interest rate. And you can see that that starts to build up over time, and eventually you get all the way down and you will hopefully clear your debt. We'll put links in the notes for more information about the snowball method. Then once you've started to get rid of that debt and you've completed step 5, it's gone, you can then think more about extending your cash buffer to cover 6 to 12 months of your expenses. So that will mean that will really be able to cover any of life curveballs, like, for example, when COVID hit and we had the pandemic and people were unable to work and weren't getting paid, or if you lost your job, for example. So that's step 6. Then step 7, I would say you should start to think about funding the short-term goals you've got out there. So that could be putting money aside into savings. So it's less than 5-year timeframes we're talking about there. So that could be things that you're trying to save for in the near future. Then you've got longer-term goals. That's more like step 8. And that might be you trying to put money aside for future expenses, for maybe even more money for retirement or something else that you want to do that's further off into the future. And then you can think about investing. Now, they're sort of loose steps that you could follow. Where are you on that journey? And interestingly, there is somebody called Dave Ramsey from the US who's a financial journalist who has this idea of baby steps. You can go and find more information about him. It's very well known. in the US, and he comes up with a methodology which he calls the 7 baby steps, where he says the first thing you do is put £1,000 in the UK, that would be dollars obviously in the US, for an emergency starter fund, similar to what I was suggesting, where you can then stop your reliance on having to use debt for something small, like maybe your tyre blowing up. Step 2 is you pay off your debt except your mortgage, and that again is using this debt snowball. Step 3, you build 3 to 6 months expenses in an emergency fund. Step 4, you invest 15% of your household income for retirement. Step 5, you save for your kids' college fund. So that'd be over in this country, maybe you want to pay for kids to go privately, or you just saving for their future in something like a junior ISA. Step 6, you clear your mortgage early, and 7, you start giving away wealth. And his methodology is you only go from one step to the next when you've completed the previous step. So these are ideas for people to look at. Where are you on that journey? Things you should be considering. And one of the things that you should also do as a last piece that will come up if you've completed the black book, please make sure that you've looked at your will this year. So make sure you do that in January. We'll put a link in the notes of the show to an article about how you can complete a will online, or how you can actually go and find professional services such as a solicitor. So Andy, that is a bit of a whistle-stop tour, hopefully giving people some ideas about things they should be doing for their finances.